Ayo, what is up? My name is Ishan. You're probably busy, which is perfect because on this channel we like to keep things sweet and short, no fluff, just quick and to the point. So in the next few minutes we're going to be going over NIO's earnings, all the important stuff minus all the fluff. We're going to go into a deep analysis of what happened and what's next for the company. So if you haven't already, make sure you've subscribed. We're so close to 1,000 subscribers and the support has just been awesome over the last few weeks. So make sure you've subscribed and let's clock in. So just to go over the numbers quickly, NIO reported revenue of $526.4 million, up 146% year over year. EPS came in at a loss of 15 cents a share. Guidance was also above estimates for deliveries for next quarter, expected to be between 11,000 and 11,500 vehicles, or 129 to 139% growth year over year, and revenues to be between 570 to 596 million, or a 120% growth year over year. So now that you get the gist of what the numbers look like, let's go a little deeper. So if you watched my earnings preview video on NIO, you know that there were two major things that we talked about to look for, and that was NIO's vehicle margins and NIO's cash on hand. Well, these were the exact two things that had the stock up over 11% before the profit taking began. Vehicle margins came in at a spectacular 9.7% compared to last quarter of negative 7.4% and negative 24.1% the quarter a year ago, which is absolutely crazy. The reason NIO says they were able to achieve this insane number was because they were able to buy some materials pretty cheap, and not to mention they were increasing production of their new cars, which means more demand. In fact, they reported over 10,000 deliveries this quarter compared to 3,500 last quarter. But this comes as no surprise, as news came out today that sales of EVs last month jumped 19.3% on the year to 98,000 units. Overall, this is very positive for NIO, as increased margins will allow the business to continue to run smoothly without the need to worry about cash flow. In fact, it was these very margins that allowed them to reach positive cash flow for the first time in company history, meaning they got paid more than they had to pay out, which brings me to my second point, which is their cash on hand. In my preview video, we discussed how NIO has been struggling for the last few quarters with cash, and they almost went bankrupt during the whole pandemic situation. But we also mentioned how their recent cash raise was probably going to allow them to stay afloat the next few quarters, which is exactly what happened. Along with increased margins and cash on hand, NIO reported $1.6 billion cash on hand, which they said could last them the next 12 months. This is a huge positive, which means that NIO probably won't have to raise more debt or more cash to stay alive. They already have a whooping $2.7 billion in total liability, so the last thing you'd want them to see is not having cash to pay off that debt or having to raise even more debt to grow their business. Overall, business is getting better, and these numbers just demonstrate the huge demand that NIO is seeing. I believe these numbers are crazy, and down the line NIO is going to give Tesla a run for its money, especially in China. If the stock ends up pulling back to $10, I will definitely be looking to buy NIO. So make sure you subscribe. We're so close to 1,000 subscribers. This video is super quick, so you didn't have to waste 10 to 20 minutes of your time knowing what happened and what's the future and all the nitty-gritty details that we went into. So make sure you've subscribed, and make sure you let me know down below what you guys also think about NIO's earnings, and I'll see you guys next time. Clocking out for now. Take it easy. Peace.